Good morning. Today we will take up departmental accounting. We have already discussed while studying the branch accounting is that branches are open for the extension of the business. This departmental accounting will be done for departments. And what is departments? Departments means under one roof, if we have got several articles to be sold, say take the case of your Big Bazaar. In Big Bazaar, they have got the provisions in one store, in another store suppose textiles or garments, in another store suppose electrics and electronic goods. So, like this there are several departments. So, but all the departments are under one roof and the owner is one, but in order to know the efficiency of the departments, various departments, whether a particular department is making profit or loss, this has to be evaluated. So, departmental accounting will have to be done and overall accounting will have to be again done. So, the profit and loss for each department will have to be determined at the department level, and again the whole of all the departments, whether they are making profit or loss, that will have to be found out. So, that is all about your departmental accounting. So, why this is done? The cause is, in order to take the managerial decisions regarding which department is efficient, making more profit, giving us more profit, and which department is a dormant department or which department is giving loss or less profit. If we have to eliminate or we have to extend, then which one is to be extended and which one is to be deleted. So, these things will be coming by preparing the departmental accounts. So, this is for the internal information only about the operating results of each department, that is required to enable the management to take decisions relating to pricing, extension or closure, etc. After taking into consideration a rate of growth, profitability, degree of risk involved in each department, etc. So, all these things we have to take into consideration and go for the extension or not or otherwise. So, the definition of departmental accounting is or department is, a department is physically a part of the whole business, not separated geographically, though treated as a separate profit center. So, a department is a separate profit center. Suppose there is a department which is dealing with only footwear, another is dealing with provisions, another is dealing with electronic items. So, each of them will have to give us what is the profit or not. So, each one is a profit center. Each one is a profit center, but geographically they are not separated. So, this is to say that they are physically a part of one organization. All of them are a part of the one organization, and physically they are not separated, but profit wise they are, each of them is a different profit center. So, that is from the definition of departments. Now, coming to the objectives, why should we or what are the objectives of keeping this departmental accounting? Number one is comparison of results with that of the previous years to ascertain the trend. What are the objectives? Let us discuss. Number one, to compare the results of the current year with that of the previous year or years. So, suppose this year we have earned a profit of 50 lakhs rupees in a particular department. Last year what was the profit? If last year's profit was 1 crore, then definitely there is nothing happy about it. You should not feel happy about it, because it was 1 crore, now it is 50 lakhs. So, we have to compare it with the last year, not only with the last year, last so many years, so that we can find out a trend. Suppose in the first year it was 50,000, second year it was 1 lakh, third year it was 2 lakh, fourth year it was say 5 lakh, like this it was going. So, if the current year is the 5th year, we can expect that it should be near about 10 lakhs. Now, if it is 8 lakh, that means we have not advanced as desired, as expected. So, this is by establishing a trend, and for establishing a trend, first of all you have to prepare the departmental accounts and find out what is the profit made. So, number 2 is to compare the results of different departments in the same year. On a particular year, if department A is making how much profit, department B is making how much profit, so who has made largest profit? We can give more importance to them, we can fulfill their demands. So, we have to compare the results of different departments in the same year, that is again through this departmental accounting. The third objective is assessing the stock position in each department. For assessment of stock of each department, by taking a note of and the movement of opening stock, closing stock, goods purchased, etc. Ultimately, what is the closing stock we can find out. To assess the stock at different periods we can find out, and that is also by doing this accounts, that is departmental accounts. Then number 4 is identifying the areas of strength and weakness. So, that SWOT analysis, strength and weakness. The strength and weakness can be determined only by going through the departmental accounts. So, if we do not carry on with this departmental accounting, you will not be in a position to know, to identify the areas of strength and weakness. If a particular department is doing well, it has got efficiency and it is strong. Another department which is making less profit can be attributed as, or can be called less efficient or a weak department. Number 5 is formulating policy for optimization of profits of the concern. Policy formulation for optimization of profits of the organization. although there are many departments and different departments are earning differently, some are earning more profit, some are earning 12%, some are earning 60%, some are earning 50%. So, like this, the policy should be formulated in such a manner that in the future the profit will be maximum. So, for optimization of profit or maximization of profit, we have to form different policies. And what will be the base? The base will be again this departmental accounting. And number 6 is calculation of departmental manager's commission when the profits are based on departmental profits. When the commission is calculated as a percentage of the profits earned by different departments. So, for calculation of managerial or manager remuneration or commission, based on their departmental profits. Suppose along with a fixed salary, some commission will be given to each manager, each departmental manager as an incentive. So, this commission will have to be calculated on the basis of the sales or on the basis of profit made by that particular department. And how can we calculate it without calculating the net profit earned? So, departmental accounting is the only solution by using which you can know what are the profit or loss earned or suffered by a particular department, and accordingly the departmental manager will be remunerated, will be getting the commission which is based on the net profit of that department's, his department's profits. The last point is to generate information needed for planning control, to generate information needed for planning, control and evaluation of performance of each department. So, to generate information, what is the information? The information from the accounts which will get, that can be used for planning, control and evaluation of performance of each department. Planning means how will extend different profit making departments. Similarly, control, if some department is not making more profit because of more expenditure, that is more administrative expenditure or more selling and distribution expenditure, let us control it. When we know it, only by preparing the departmental accounts, that will be possible. Then evaluation of performance as a whole of that particular department also can be done through this departmental accounting. So, these are the objectives of departmental accounting. We will read two methods of preparation of this departmental accounting depending on whether separate set of books are maintained for each department or not, and where accounts of all departments are maintained together in columnar books. So, first of all we will be taking a situation where separate set of books are maintained for each department. Number 1, where separate set of books are maintained for each department. So, when separate set of books are maintained for each department, usually by big organizations this is adopted, because they can afford, because this will be very costly. So, for each department there will be a full set of accounts. Suppose department A, department B, department C, department D are there. For department A there will be purchases, purchase returns, sales, sales returns, selling expenses, carriage inwards, all these things are there. So, for them one book will be maintained. Similarly, for department B the same thing, purchases, opening stock, then sales, closing stock, then the selling expenses, administrative expenses, all will occur. For them again you will be maintaining. So, in this way several accounts will have to be maintained, means several, for each department there will be one accountant. So, his salary is also there. So, it can be afforded only by bigger organizations. Smaller organizations cannot do it because it becomes very costly for them. But there are sometimes under the compulsion of the government we have to do it. So, even if it is a small organization, if the government compels that no, you have to maintain separate accounts for each department, then you have got no other alternative. So, there although it is costly, it will be costly for you, you have to open it. Then this is possible, I mean this is that compulsion will be possible in case of suppose insurance companies. In case of insurance companies, they have got fire insurance, they have got marine insurance, they have got life insurance, they have got bulldog insurance, fidelity insurance, this there are different types of vehicle insurance, etc. So, for all these insurances the government orders that you cannot do it in one combined account. For fire insurance there will be separate, for marine insurance there will be separate, for general insurance there will be separate. So, all these insurances, insurance companies will have to maintain different or differently these departmental accounts in separate sets of books. Here each department is treated as a separate entity or separate unit, and they keep their accounts separately. They have to open their accounts separately. Secondly, at the end of the year, trading results of each department, whether there is gross profit or gross loss, they are combined to get the trading results of the organization as a whole. So, as a whole it will be mixed, only used by large general stores, insurance companies, etc., and this is not possible for small organizations. So, what do? They will be opening their own trading and profit and loss account, and ultimately the profits will have to be aggregated. So far as the whole concerns, whole organization's profits are to be determined. Now, coming to the second type, where accounts of all departments are maintained together in columnar books. Where accounts of all departments are maintained together in columnar books. So, this is the second option, where accounts of all departments are maintained together in columnar books. What is columnar books? I shall tell you in detail, but for the time being let us know that instead of preparing separately for each department, the accounts will be prepared in one place for all the departments, and for each department there will be one column. That is why it is called a columnar book. So, in order to there will be one central accounting department who will be in charge of maintaining all the accounts or the accounts of all the departments simultaneously, and individual departments keep only records. All the departments have to keep their own records only for purchases, sales, then opening stock, closing stock, purchases, sales, stock, that is both opening and closing, then return inward, return outward, returns, and lastly for direct expenses. So, some expenses are there which are direct to that department. So, they will keep a record of all these things, their own purchase, own sales, their opening stock, closing stock, return inward, return outward, and their direct expenses. For this they will have to depend on themselves only. They will be preparing for all their own information. Then in order to ascertain departmental gross profit, departmental trading account is prepared. So, here what will be the process? Let us go in detail. Number 1, departmental gross profit can be ascertained by preparing the departmental trading accounts. Then in that departmental trading account you have got opening stock, closing stock, purchases, that is net purchases, purchase less returns, net sales, sales less return inwards, and direct expenses from columnar books. From the columnar books we can prepare all these things, the information will be supplied by from the columnar books, and we can determine the gross profit by preparing the departmental trading accounts separately. Then number 2 is departmental expenses. The expenses of the business can be divided into two categories, one is direct expense, another is indirect expense. So, the direct expenses which are exclusively spent for each department. So, there will be two departments, number 2 direct expenses and indirect expenses. All the expenses will have to be divided into direct expenses and indirect expenses. Here we mean direct expenses to those expenses which are exclusively for one department. So, those departmental expenses will be borne by the respective departments only, and those expenses which cannot be called direct expenses will include like wages, staff salaries, packing materials etc. are charged to the respective departments. These are charged to the respective departments. And coming to the indirect expenses, there are two types of indirect expenses. One is expenses which can be allocated. So, what is allocation? When the whole of a particular item of expense can be attributable to a particular department, that is called allocation. So, those expenses which can be allocated, that can be given to the respective department for which it has been spent, and those expenses which cannot be allocated have got to be apportioned on some suitable basis. So, expenses which cannot be allocated are to be apportioned. On some basis. Different basis will be there for different, like suppose lighting, floor area can be taken as the lighting. Similarly, there are different bases which we will read. So, in this way, first of all we have to see that the departmental gross profit, how it will be determined by preparing the departmental trading accounts. Okay. then the direct expenses will be charged to the respective department only. Then coming to the indirect expenses, again there are two types of expenses which can be directly allocated to a particular department and which cannot be. Those expenses which can be directly allocated will be charged to that particular department, and other departments will not bear anything out of that. But the second category, which cannot be allocated, are to be apportioned on some basis. Some basis means the basis, a suitable basis will have to be determined from the organization, and on that basis this will have to be apportioned to various departments. In this way all the expenses will be totaled up and you will be in a position to find out the profit or loss. Now, it is important to take a table where we can know what are the different categories of expenses and what will be the items under that and what is the basis of apportionment. Let us prepare a table for that. Serial number, then we can take category of expense, then we can have items of expenses in that category, then we can take the basis of apportionment. The first category is selling expenses. So, what are the items in the selling expenses? There are travelling salesman salary, then you have got salary and commission also, discount allowed, bad debts, advertisement, then after sale service, these are all under this category. Now, what is the basis of apportionment of all these expenses? The basis should be sales of each department, sales of the concerned department. So, if the sales are more, then the departmental charge will be more out of this. Second item is building expenses. So, what are coming under building expenses? That is your rent, rates, taxes, insurance, repairs and renewals, suppose there is some breakage or some maintenance is required for some or say whitewashing is required from time to time, all these are maintenance expenses. Then air conditioning, heating, so in foreign countries, the cold countries, heating is required. So, that will be on the basis of the floor area. floor area of his department will be the basis on which these expenses like rent of the building, rent, rates, taxes, insurance of that building, repairs and renewals, heating and air conditioning, etc. All these things will be apportioned on the basis of floor area. Number 3 is lighting. Lighting, as you know, all types of lighting will be coming under this, and the difference will be, I mean this apportionment basis will be light points or area. How many light points are there, that you can calculate, or the lamps used, that also you can do it. If it is not available, then you can go through the area. This is number 3. Number 4, you have got power. So, here HP, that is horsepower of the machines used in the same department, or horsepower multiplied by number of hours. How many hours it is running? Suppose there are in two departments, one machine is running 5 hours, another machine is running 20 hours. So, naturally, even if the HP of the machines of both the departments are the same, but where it is used for 20 hours and where it is used for 5 hours, 4 times expenses will have to be borne. So, it is more scientific to take the HP into number of hours. This is regarding the power. Insurance is of various types, and insurance for different products will have to be taken accordingly. So, insurance on stock, the basis of apportionment will be average stock carried. If the insurance is on premises, it is on the basis of area occupied or ratio of or area occupied. Then the third type of insurance is loss of profit. Let us understand what is this loss of profit. If we are making huge amount of profit every year, but in a particular year we are not making any profit, rather we are running losses, then that loss of profit, even if it is less profit we are earning, that is loss of profit, and loss of profit can be also insured and the insurance company give. For that we have to give premium. So, as a whole, for the whole organization, if some insurance premium has been given for the loss of profit, then how to apportion it? That is on the basis of the profits of previous years. There must be data regarding the profits earned in different years previous to this year. So, that can be the basis which will provide us the basis for loss of profit insurance. Then the next point is plant and machinery, that is insurance on plant and machinery. On plant and machinery, on the basis of the value of the plant, we can apportion. And the last one regarding the insurance is group insurance premiums. For all the employees as a whole, one group insurance premium will have to be given, and that will be on the basis of wages of each department. Wages of the respective department will form the basis for apportionment of any premium paid towards the group insurance of the employees. This is regarding the insurance. Then we will come to Number 6, depreciation. Depreciation of different assets, fixed assets, value of assets in each department. That will be the basis, because the depreciation will largely depend on the value of the fixed asset. Then we will come to number 7, that is repairs and renewals. It is almost the same. So, this will be on the value of fixed assets only. Number 8 is labor welfare expenses. Labor welfare expenses will include transportation, medical facilities, education facility for the children, health facilities for the these employees, etc. All these are called labor welfare expenses. So, these labor welfare expenses will have to be borne, that is your canteen expenses, etc., will be borne by the number of employees. It is not on the basis of the wages, but on the basis of number of employees, because one employee earning rupees 20,000 will consume the same items from the canteen as an employee who is getting 5,000 rupees also. So, the wages should not be the criteria, wages should not be the base, rather the number of employees should be the base for this labor welfare expenses. Number 9 is work manager salary. Work manager salary if there is only one works manager and he gives attention to various departments, then it can be on the basis of their salary, it will be that salary will have to be distributed on the basis of time spent. Time spent in various departments. And the last point is carriage inward. Carriage inwards, and that will be on the basis of purchases of each department. Purchases of each department will be the basis for apportionment of these things. So, this is in short or precision, we can say these are the different bases on which we can distribute or can apportion the expenses. Some expenses are to be allocated, and those expenses which cannot be allocated will have to be apportioned on this basis. Now, we have to take up a problem on this departmental accounts. This is a question: from the following balances appearing in the books of Ramarao, prepare departmental trading and profit and loss account for the year ended 31st March 2016 and balance it as at that date. There are two departments, Department A and Department B. Opening stock is given, purchases, sales, wages, rent and taxes and insurance, then sundry expenses, salaries. Department wise only purchases, opening stock, sales and wages are given. Closing stock is also given in the adjustment. But there are certain items like rent, rates, taxes, insurance which is to be apportioned, then sundry expenses, salaries, lighting and heating, discounts allowed, discount received, advertising, carriage inward, furniture and fittings, plant and machinery, sundry debtors, sundry creditors, Ramarao's capital, Ramarao's drawings, cash at bank, cash in hand, everything is given to us. Then in addition some adjustments are given. Following information is also provided: internal transfer of goods from A department to B department 420, the items rent, rates, taxes, insurance, sundry expenses, lighting and heating, salaries and carriage inward to be apportioned 2/3 to department A and 1/3 to department B. So, it has been already given to us 2:1. Advertisement is to be apportioned equally, that means 1:1. Then discounts allowed and received are apportioned on the basis of department sales and purchases respectively, excluding transfers. Then depreciation at 10% per annum on furniture and fittings and plant and machinery to be charged 3/4 to A and 1/4 to B department. Services rendered by B department to A department included in wages ₹500, that will take care of. Then closing stock is given. There are no additions to or sales of plant or furniture. So, plant and furniture whatever was there, that was from the very beginning. So, now we have to provide depreciation for the full year. So, let us prepare one departmental trading and profit and loss account first and then the balance sheet. These are the liabilities and these will be the assets. We will write that. And before that we have to prepare one trading and profit and loss account. Trading and PL account of Ramarao for the year ending 31st March 2016. This we can prepare in different columns. Department A, Department B and total. So, this is the format in which we have to prepare this problem. First of all, we have to know what are the different bases for different items. First of all, opening stock is given to us. So, we can take the opening stock. To opening stock. For department A, it is given 17,000. For department B, it is 14,500. That is in the question. So, the total is 31,500. Then purchases is also given 35,400 and 30,200. Two purchases, 35,400 and 30,200. So, in this way the total is 35 plus 30 65,600. Then carriage inward 1560, it is given advertisement discount carriage inwards. Carriage inwards is 2340, it is given. 2 carriage inwards total is given to us, carriage inwards, that is 2340. We will distribute it or apportion it on some suitable basis, let us wait for that. Then we have got after carriage wages. Wages we have got 8,200 and 2,700, 8,200 and 7,000, 8,200 and 2,700 and 2,700. So, in this way it is coming to 10,900. Then some wages have been incurred for some other department by one department. So, let us take that one. So, that was wages this thing, then internal transfer of goods from department A to department B. Okay. After wages we can come to transfer of goods, internal transfer of goods from A department to B department. So, B department is receiving department. So, to internal transfer of goods, B department is receiving 420 and we can write this one by internal transfer of goods, this department is giving, so credited 420. Then we have got transfer of wages, this is goods, and to transfer of wages. Transfer of wages from department B to department A. So, department A will be charged with rupees 500 and here by transfer of wages he will be getting a credit, B will be getting a credit of 500. So, these are the items to be shown in the debit side of the trading account and some items also we have recorded in the credit side. So, far the transfer of goods and wages are concerned. Then the sales are given 60,800 by sales, 60,800 and for B it is 51,250. In this way it is coming to 050 carry 1 plus 1 2 1,12,050. Then the closing stock. Closing stock department A 16,740 by closing stock and department B it is 12,050. So, in this is the total will be 28,790. Then we will go to find out the gross profit and after the gross profit carried down. The totals are in the credit side, it is coming to 77,960, and this is coming to 0, 0, 63,800, and the total is 1,40,840. Okay, but how it is 1,40,840? It should be 1,40,860. We will see. Then let us take this one 77,960, 63,800, and this is 1,40,840. It should be 860. Anyway, the gross profit will be, if we deduct the total of these debit sides, we are getting 15,300. We will verify whether it is coming or not. 0, 15,300 we have taken, 500 we have taken, 8,200, 1,560. Carriage inward we have not taken. Carriage inward is 2,340. That will have to be apportioned on the basis of carriage inward to be apportioned on the basis of 2/3 and 1/3. So, 2/3 in 2,340 is the total carriage expenses, that will be apportioned in the basis of 2:1. So, divided by 3 will be, this will be 780, and this will be double of that, that is 1,560. So, now let us verify whether it is coming or not. 6, 3 plus 5, 8, 8 plus 2, 10, plus 5, 15, plus 4, 9, carry 1, 1 plus 5, 6, plus 7, 8, 15, 15, 20, 27, 2, 2, 1, 3, 3, 6, correct. Then this one is coming to 1. So, this gross profit is 15,200, $63,800, 15,200 is the gross profit. Then this will be 30,500. These two taken together. So, it is coming to 1, 14, 1, 6, 11, 6 6 15 3 18 6 24 5 29 30 40 5 5 9 14 14 17 17 36 30 28 2 2 4 5 9 1 10 1 1 3 4 0 5 5 5 6 11 3 14. Correct. So it is coming like this. Then the next one, that is your salaries etc., that is the profit and loss account items. Now we will discuss. To first of all, by gross profit brought down 15,300, 15,200 and 30,500. Total is correct. So, to salary, let us see what is the total item of salary, then we will apportion it. Salary is coming to rupees 13,800. Salaries is 3,000. So, when salaries total is 3,000, it will be apportioned again in the basis of 2:1, because in the adjustment it is given rent, rates, taxes, insurance, sundry expenses, lighting, heating, salaries and carriage inward to be apportioned 2/3 to Department A and 1/3 to Department B. So, it will be 2,000 here and 1,000 here. Now, coming to the next item, that is your rent, rates and taxes, rent, rates etc. We have got rent, rates etc. 9,390, 9,390, this is to rent, rates etc. So, it will be 3,130 and 6,260. Then you have got after rent, lighting and heating 2,100, to lighting and heating 2,100. 2,100 means it will be 700 for one and 1,400 for two shares. Then after lighting and heating, sundry expenses 3,600, sundry expenses also will have to, sundry expenses are 3,600, to sundry expenses, that is 3,600. So, 1,200 here and 2,400 for Department A. Now, let us come to the next item, that is lighting and heating we have already taken. Discount allowed, next item will be discount allowed. So, that is on the basis of ratio of sales. Discount allowed is coming to 2,220, to discount allowed the total discount allowed is 2,220, and if you divide it on the basis of sales, that is 60,800 is to 51,250. So, that will give you 1205 and 1015. You can make the calculations, 2,220 divided by the total of these two multiplied by 60,800, that will give you 1,205 and this will be 1,015. The next item is to advertising. Advertising will be equally distributed. and advertising is 3680. To advertising that is 3680, and in the question it is given that it will be equally borne 1830 each. Next one is 3680, so it will be 40. Next item is depreciation. Total depreciation is service rendered by departmental 10% on furniture and fittings and plant and machinery, and 3/4 and 1/4. So, let us calculate what is the total depreciation on the furniture. The furniture are 3000, furnitures are 3000, less depreciation will be there, 10%, that is 300. So, it will be 2700. So, anyway we will be taking 300, that is the depreciation on furniture. Then we will come to depreciation on plant and machinery, and the plant and machinery is 21,000. Plant and machinery 21,000, less depreciation 2,100. So, it will be 18,900, and this 2,100 will be added here. Total is coming to 2,400. Total depreciation will have to be divided in the ratio of 3:1, that is 3/4 to A and 1/4 to B. So, for B it will be 1/4, for A it will be 3/4. 1/4 is 600 and this will be 1800. So, depreciation will be 1800 here, 600 here, and total will be 2400. After depreciation, we will come to the right hand side, credit side. Gross profit is 15,300 and 15,200 we have already brought. The next one is discount received, that is on the basis of ratio of purchases. By discount received, the total is discount received 650. So, when it will be divided by total of 35,400 and 30,200, that will be 65,600 multiplied by 35,400, it will give you 351 and 299 approximately. So, that is the amount of discount received. Then coming to profit or loss, we will have to determine. These are the different items already we have taken. Now, let us find out whether there is profit or loss. Now, in the first instance, this side is coming to this is coming to 16,905 and it is coming to 15,651. This is the credit side and the debit side is 16,950, 16,905. So, there is a loss. So far as department A is concerned, there is a loss. How much? 1,254 rupees will be the loss. So, the loss will be by net loss. 1,254. And So far the B department is concerned, let us take it 499, 15,499, so it is coming to 4, 4 का 5, 5 3 8 1 9, 8 14 16 17 26, 2 का 3 का 4 का 5 8 9, 6014. So this is coming to 6014 and the total is 15,449, 16,905. And now let us take these two totals. The two totals are coming to 31,150. 31,150. This side will be less. So, there will be profit of, actually these two you can take. So, it is coming to 6014 minus 1254, which will be equal to 4760. And the total will be 31,150. Correct. Then we will come to the balance sheet. In the balance sheet, capital as on 1st April 2015 was given to us opening, purchase, sales, closing, salaries, discount, furniture, cash in hand, internal transfer of B goods, sundry expenses, advertisement, discounts, depreciation, closing stock. There is no addition to this thing. From the following balances on 31st purchases, opening stock, purchases, sales, wages, rent, sundry expenses, salaries. Then this is given. Rama Rao's capital was 47,660. So, capital was 47,660. Add net profit, which is coming to 4760. So, in this is the total is coming to 52,420. Then out of that there is a drawings of 4,500, less drawings. Drawings is 4. Ramarao drawing 4,500. 4,500. So, this is coming to 0, 2, 9, 47,920. So, that is his capital now 47,920. Then sundry creditors are given to us, sundry creditors 18,600. Sundry creditors 18,600. We have got two furnitures and this thing asset, fixed assets, that is coming to 18,900 and 2,700, two things. Then current assets are stock 28,790. This is given in this question. Stock, that is the closing stock. Closing stock will be 16,740. Closing stock A is having 16,740 and B 12,050. So, the total will be 790, 28,790. 28,790. Then sundry debtors are 6060. Sundry debtors 6060. Then you have got cash at bank 9,900, and cash in hand 170, 9,900 and 170. This is bank, this is cash. Now, you can get the total. So, this side is coming to 520, 66,520. Let us see this side. This is coming to 0. $65,520 it is coming. Let us again calculate 9, 6, 7 sorry, this is 66. So, the balance sheet total is coming to 66,520. So, in this way it is not a very difficult thing to work out the problem. Only thing is you have to be concerned about the apportionment, how the apportionment is made on the basis of this given information. Thank you. This is all regarding your unit 4, that is branch and departmental accounts.